This video is aimed at providing viewers a better understanding of the Municipal Finance Management Act, MFMA. Purpose: adopted in 2003, the complete name of the MFMA is the Municipal Finance Management Act No. 56 of 2003 and applies to municipalities and municipal entities, in other words, the third sphere of government. The objective of this act is to ensure transparency, accountability, and to secure sound and sustainable management of the fiscal and financial affairs of municipalities and municipal entities, amongst other principles. Key definitions that are relevant to the MFMA can be obtained from Chapter 1 of the MFMA. However, we will take you through the more frequently used definitions. The definitions are as follows. A municipality is an organ of state within a local sphere of government exercising legislative and executive authority within an area. In other words, a municipality is responsible for the laws applicable to a demarcated land that belongs to that municipality. It consists of the political structures, that is, the council, the administration, that is, the officials employed by the municipality under the leadership of a municipal manager, and the community within the municipality's demarcated area. Important to note is that a municipality has a separate legal personality from its community. As described in earlier videos, municipalities broadly fall under three categories in the form of metropolitan, district, and local municipalities. Examples of metropolitan municipalities include the City of Johannesburg and the eThekwini municipality. Examples of district municipalities include the OR Tambo District Municipality, while local municipalities include Midvaal Local Municipality and Steve Tshwete Municipality. A municipality entity is a company or any other corporate entity, including its subsidiary, established in terms of any applicable legislation, which is controlled by one or more municipalities. An example of a municipal entity is Johannesburg City Power. Accounting officer position has different meaning for a municipality compared to a municipal entity. In the case of a municipality, the accounting officer is the municipal manager, while the chief executive officer of a municipal entity is the accounting officer of that entity. Fruitless and wasteful expenditure means expenditure which was made in vain and would have been avoided had reasonable care been exercised. Simply put, this would refer to expenditure that was wasteful, where no value was received for such expenditure or that the expenditure was unnecessary. Examples of such expenditure are avoidable interest, penalties, or spending on an asset when it was not used. Irregular expenditure means expenditure incurred in contravention of, or that is not in accordance with, a requirement of this Act, or the Municipal Systems Act, or the Public Office Bearers Act, or that is not in accordance with the Supply Chain Management Policy or any of the municipality's bylaws which has not been condoned. The most common irregular expenditure relates to expenditure that has been incurred without complying with the legislative requirements around procurement and supply chain management. This differs to fruitless and wasteful expenditure already mentioned, since it does not mean that the expenditure was incurred in vain. In other words, the goods or services being procured were received and utilized. An example of such expenditure is procuring goods and/or services where 3 quotes are a requirement in terms of a specific legislation, but only 2 quotes were obtained. Unauthorized expenditure refers to over-expenditure or expenditure not in accordance with the municipality's approved budget or unrelated to its function. Mayor means the councillor elected as the executive mayor. A municipal council means the council of a municipality. Councillor means a member of the municipal council. Councillors are as the result of the local government elections and represent their own political parties. MEC for finance means the member of the executive council of a province who is responsible for finance in that province. MEC for local government means the member of the executive council of a province who is responsible for local government in that province. Political office bearer means the speaker, executive mayor, deputy executive mayor, mayor, deputy mayor, or councillor. Senior manager in relation to a municipality means a manager who is directly accountable to the municipal manager, and in terms of a municipal entity is a manager directly accountable to the chief executive officer. An example of a manager directly accountable to a municipal manager or the chief executive officer is the CFO of a municipality or municipal entity. General functions of national treasury and provincial treasuries. Within the local government space, the role of the National Treasury is to enforce compliance with the measures established in terms of the Constitution and the MFMA. Amongst others, the National Treasury may monitor the budgets and fiscal management by municipalities, promote good budget and fiscal management, monitor and assess compliance, take appropriate steps if a municipality or municipal entity is in breach of the MFMA. The Provincial Treasury must promote the objectives of the MFMA and assist National Treasury in enforcing and monitoring compliance with the Act. Municipal budgets. In general, a municipality may incur expenditure only in terms of an approved budget. The council of a municipality must for each financial year approve an annual budget for the municipality before the start of that financial year. The mayor must table the annual budget at a council meeting at least 90 days before the start of the budget year. The budget must include, amongst others, the anticipated revenue from each revenue source, expenditure, actual revenue and expenditure for the previous financial year, the proposed costs of the salary, allowances and benefits of each political office bearer, councillors and the municipal manager, CFO and each senior manager. Examples of typical revenue sources for municipalities are property rates, traffic fines and service charges such as electricity, waste management and the sale of water. The budget must in general be divided into a capital and operating budget. For each revenue source, the municipality must have key performance areas for each financial year that the municipality must report on. For example, for water-related revenue, a key performance area can be the number of households that have access to basic water, for which the municipality will have a predetermined target and for which it will report against at the end of the financial year. Publication of annual budgets. Immediately after an annual budget is tabled in the municipal council, the accounting officer of the municipality must make public the annual budget and invite the local community to submit representations in connection with the budget. This requires the municipality to make available the budget to the public in that municipality to provide input which must be considered before the budget is finalized. This process of involvement of the local community also ensures that the municipality is held accountable for service delivery to the community and the public at large in terms of its legislated service delivery mandate. The accounting officer must also submit the annual budget in both printed and electronic formats to the National Treasury and relevant provincial treasury, and in either format to any prescribed national or provincial organs of state and to other municipalities affected by the budget. Consultation on tabled budgets. The Municipal Council must consider any views of the local community, National Treasury, Provincial Treasury, and any provincial or national organs of state or municipalities which made submissions on the budget. After considering all budget submissions, the Council must give the Mayor an opportunity to respond to the submissions and, if necessary, to revise the budget and table amendments for consideration by the Council. Approval of annual budgets. The Municipal Council must at least 30 days before the start of the budget year consider approval of the annual budget, and it must be approved before the start of the budget year through a Council resolution. The accounting officer must submit the approved annual budget to the National Treasury and the relevant provincial treasury. Municipal Adjustments Budget. A municipality may revise an approved annual budget through an adjustments budget. Budgets can be revised in cases where there is a material under-collection of revenue during the year, or where there is a need to correct any errors in the annual budget, and also where the municipality may need to provide for any other expenditure that was not budgeted for. Only the Mayor may table an adjustments budget in the Municipal Council. When an adjustments budget is tabled, it must be accompanied by an explanation how the adjustments budget affects the annual budget and motivation of any material changes to the annual budget, and an explanation of the impact of any increased spending on the annual budget. However, municipal taxes and tariffs may not be increased during a financial year except when required in terms of a financial recovery plan. A financial recovery plan must be aimed at securing the municipality's ability to meet its obligations to provide basic services or its financial commitments. Examples of municipal taxes and tariffs are property rates, which are specific rates for different types of properties depending if they are agricultural, business, commercial, mining or residential properties. Unforeseen and unavoidable expenditure. The Mayor may, in emergency or other exceptional circumstances, authorize unforeseeable and unavoidable expenditure for which no provision was made in an approved budget. Such expenditure would then be an adjustment to the approved budget and will require approval by the Municipal Council within 60 days after the expenditure was incurred. If not approved within 60 days, the expenditure will fall into unauthorized expenditure definition. Unauthorized, irregular, fruitless and wasteful expenditure. In implementing and executing a municipality's budget, there is a risk that unauthorized, irregular or fruitless and wasteful expenditure may be incurred. A political office bearer of a municipality is liable for unauthorized, irregular, or fruitless and wasteful expenditure if that person knowingly instructed an official to incur such expenditure. There must also be an investigation in each instance of such expenditure to determine if any person is liable for the expenditure. The investigation must be conducted in terms of the municipality's internal policy that would ordinarily outline independence requirements of the person appointed to conduct the investigation, as well as qualifications and experience. In general, a municipality must recover unauthorized, irregular, or fruitless and wasteful expenditure from the person liable for that expenditure. The accounting officer must promptly inform the mayor, the MEC for local government in the province, and the Auditor General in writing of the details of such expenditure, including whether a person is responsible or if there is an investigation underway, as well as the steps to recover or rectify such expenditure. If it has been found by the AGSA that such investigations did not occur, this could form the basis of a material irregularity, which will be discussed further in a later episode regarding auditing in the public sector. Responsibilities of municipal officials. Accounting officers. As mentioned in the definitions, the municipal manager of a municipality is the accounting officer for the purposes of this Act. The accounting officer must act with fidelity, honesty, integrity, and in the best interests of the municipality. The accounting officer may not act in a way that is inconsistent with the duties assigned or use the position or privileges or confidential information for personal gain. General financial management functions. The accounting officer of a municipality is responsible for managing the financial administration of the municipality and must take reasonable steps to ensure that the resources of the municipality are used effectively, efficiently, and economically, that full and proper records are maintained, that the municipality has an internal audit function and maintains effective, efficient, and transparent systems of internal controls, that unauthorized, irregular, and fruitless and wasteful expenditure is prevented, and that policies around tariffs, rates, credit control, debt collection, as well as supply chain management are developed. The accounting officer is also responsible for and must account for all bank accounts of the municipality. The accounting officer is also responsible for the management of the assets, liabilities, revenue and expenditure of the municipality. Financial administration. The management of a municipality's administration consists of the accounting officer, the chief financial officer, senior managers, and any other senior officials designated by the accounting officer. Management must assist the accounting officer in managing and coordinating the financial administration of the municipality. Each senior manager has similar responsibilities as those of the accounting officer within their areas of responsibility. The accounting officer of a municipality must develop an appropriate system of delegation and may delegate to the municipality's management any of the powers or duties assigned to the accounting officer. Such delegations must be in writing. Examples of such delegations are authorization levels of certain levels of expenditure in terms of amounts or nature. The municipal manager may delegate certain expenditure approvals to the CFO as an example. Without such a delegation, the municipal manager must then assume responsibility for such approvals. The accounting officer may confirm, vary, or revoke any such delegation. Municipal entities. As indicated in the definitions, the accounting officer of a municipal entity is its chief executive officer. The duties of the CEO are similar to that of a municipal manager in terms of this Act. The CEO must report in writing to the board of directors of the entity and to the accounting officer of its parent municipality any financial problems, which includes under-collection of revenue, shortfalls in budgeted revenue, overspending of the entity's budget, delays in payments to creditors, or overdraft in any bank account. Irregular and fruitless and wasteful expenditure must be promptly reported by the board of the entity in writing to the mayor and municipal manager of its parent municipality, as well as the Auditor General. The details of such expenditure, including the steps to recover or rectify such expenditure. The CEO must also report to the Speaker of the parent municipality any interference by a councillor outside the councillor's assigned duties. The duties of the CEO, which as mentioned are similar to that of a municipal manager, also fall on other officials of the entity within their respective areas of responsibility. To note that the CEO may delegate any powers or duties assigned to any other official, and this must be done in writing. Supply chain management. Municipalities and municipal entities must have and implement a supply chain management policy, which must be fair, equitable, transparent, competitive, and cost-effective, which are the principles laid out in our Constitution. This Act does indicate the areas such policy must cover at minimum, and some of these are the range of supply chain management processes that may be used, including tenders, quotations, auctions, and other types of competitive bidding processes and mechanisms for bids, compulsory disclosure of any conflicts of interest of prospective contractors, amongst others. The accounting officer must implement the supply chain management policy. No councillor of any municipality may be a member of a supply chain management committee that evaluates or approves any such process. No person may interfere with the supply chain management system. Note that there is a separate episode later in the series that will discuss supply chain management in more detail. Financial reporting and auditing. Every municipality and municipal entity must for each financial year prepare an annual report in accordance with Chapter 12 of the MFMA. The purpose of the annual report is to provide a record of the activities during the financial year. This annual report must include, amongst others, the annual financial statements, the Auditor General's report, and the annual performance against agreed performance objectives. The annual financial statements mentioned must fairly present the state of affairs of the municipality or entity, its performance against its budget, its management of revenue, expenditure, assets and liabilities, its business activities, its financial results, and its financial position as at the end of the financial year. These financial statements must be prepared in terms of the standards of GRAP, and these standards will be discussed in more detail in a future episode that is part of this series. In addition to the standards of GRAP requirements, the MFMA has additional disclosure requirements for the annual financial statements, which include the particulars of the salaries, allowances, and benefits of political office bearers, councillors, members of the board of directors, the accounting officer, and every senior manager. These financial statements must be prepared and submitted to the Auditor General for auditing within 2 months of the financial year. Municipalities and municipal entities have June 30th financial year ends, so practically this date of submission to the Auditor General is August 31st of each year. The Auditor General must audit those financial statements and submit an audit report on those statements to the accounting officer within 3 months of receipt of these financial statements, which translates to a date of November 30th each year. The municipality must address any issues raised by the Auditor General in an audit report. General Treasury matters. Each municipality and municipal entity must have an internal audit unit. This unit must prepare a risk-based audit plan and an internal audit program for each financial year. The unit must also advise the accounting officer and report to the audit committee on the implementation of the internal audit plan. Each municipality and each municipal entity must have an audit committee, which is an independent advisory body, which must, amongst others, advise the municipal council, political office bearers, the accounting officer, the board of directors, and the management staff on matters such as internal financial control, risk management, accounting policies, effective governance, and the adequacy, reliability, and accuracy of financial reporting and information. The Audit Committee should also review the annual financial statements and respond to the Municipal Council on any issues raised by the Auditor General in the audit report. In addition, the Audit Committee must carry out such investigations into the financial affairs of the municipality or municipal entity as directed by the Municipal Council or the Board of Directors. The Audit Committee is appointed by the Municipal Council for both the municipality and the municipal entity. It must consist of at least 3 persons with appropriate experience, of whom the majority may not be in the employ of the municipality or municipal entity, and must meet at least 4 times a year. A single audit committee may be appointed for a district municipality and all the local municipalities within the district municipality. Similarly, a single audit committee may be appointed for a municipality and its municipal entities. Please view the other episodes in this series to gain a better understanding of how the public sector operates. In our next video, we will be discussing financial and performance reporting.